right. So then today I want to do this last topic on environmental management accounting, which is a last topic, theoretical topic in advanced management accounting. It doesn't miss in your exam, this one. It can make you see places that you've never seen before. Ladies and gentlemen, when we talk of environmental management accounting, if somebody was to ask you to describe what environmental management accounting is, in your own words, in your own way of understanding, what really comes to your mind whenever somebody mentions something to do with the environment in terms of production? And why is it important for you as an accountant to be so much conversant on issues of environment to necessitate you to do what we call environmental management accounting? There's so many things that come to my mind whenever I hear about environment. Number one, it's all about sustainability. This environment that we have outside there gives us so much as organizations, as individuals. We can't be having anything to produce, ladies and gentlemen, if we do not have raw materials. Raw materials coming from timber, rain, so many things, all right? So if you are every time consuming from this environment and we don't plow back anything to it, then automatically we are going to get into so much of a climate changing. All right. Like we happen to be having a student here, I don't know whether it's in this class or AFM, who is based in Djibouti here. So he called me today and he told me that, you know what, yesterday the kind of rain that they received in Djibouti was abnormal. It's something that has never ever been seen before. Yeah, so it means that we are really depleting our environment without doing anything much to it. And that is why you'll be surprised when, for example, it is hot, it becomes terribly hot because of the ozone layer. When it's raining like today, now water is carrying people, all right? So whenever we talk about environmental management accounting, it is a management accounting system that identifies, collects, analyzes, and uses both physical and monetary information relating to environmental costs and impacts to support what we are doing in the company, to support internal decision making. So it's going to look beyond just money. No. It will be looking at both financial and non-financial data. So it integrates financial data, the costs we incur, savings we shall make, investments, non-financial data, energy, water, wastes, emissions, which will be measuring on other metrics other than money. Role of accountants in environmental cost management. Role of accountants in environmental cost management. Number one, we are required here to know how to identify environmental costs. Accountants help identify costs that are often hidden in overheads, such as waste disposal. How much are we paying to these 𝐾𝐸 lorries that come in this case here to collect our wastes? Energy and water consumption. Environmental compliance cost. How much do we pay to comply with NEMA? For example, if we are in the construction industry, pollution control and remediation. Yeah, remediation, of course, ladies and gentlemen, the costs incurred to remedy a situation. All right. Example: a manufacturing firm may treat waste disposal as overhead, yet environmental management accounting reveals it as a direct environmental cost linked to inefficiency. Number two, after you've identified, then number two, we must measure and do cost classification. Accountants classify environmental costs into prevention costs. Yeah, for example, you bring in cleaner technology. We are preventing these environmental damages occurring. Costs of detecting, like the cost of doing environmental audits. failure costs, e.g., when we fail, of course, to protect our environment, we are prone to fines. We have cleanup costs, like you saw the other day, BP Shell, which incurred billions and billions of US dollars trying to clean up the ocean when we had a spillover of oil to some ocean there, right? So failure costs can be very, very costly. Example, installing a water recycling system. If we install a water recycling system, then that automatically will be a prevention cost. We want to prevent, ladies and gentlemen. Yeah, you see, this water that we have, instead of it just, somebody has just washed their hands like this, and then we have now this water that somebody has just used to wash their hands, just disappearing like that. What if we have a recycling system? Yeah, this water can be recycled very well and put back into good use. We are preventing ourselves in this case here from having higher water bills. And of course, we are also preventing the environment from damages. Paying pollution fines, that is failure cost. And I would want to draw your attention, ladies and gentlemen, to something here, because I want you to understand this very well because of the kind of questions that we'll be getting from CASNEB. If you look at, for example, this question, SIMTEL, is it SIMTEL? No. Maybe it has disappeared, eh? Yeah, like now this question. You can see Trans-Africa, will be looking at it later. Classify the above costs as prevention, detection, internal failure, and external failure. This cost here. Evaluating and selecting suppliers, treating and disposing of toxic wastes, materials, inspecting process for regulatory conformance, restoration cost of carbon emissions. When they brought us this question, ladies and gentlemen, very few students were able to do this question of August 2024, very few. So I want you to be very, very keen as I put down these great concepts, because whether you like it or not, you'll be able to get questions from this area. Yeah, so like installation of a water recycling system, yeah, that's a prevention cost. But when you start paying fines, you failed. That's a failure cost. Cost control and reduction is the third function of us accountants on issues of environment, cost control. Yeah, it's all about water bills, electricity bills. If you are great accountants, would want to be also good to the company and to the environment, we must always endeavor to ensure that everybody, ladies and gentlemen, works efficiently. We must reduce our costs to do with environmental issues. So cost reduction, accountants analyze environmental costs to reduce waste. Yeah, improve efficiency, enhance profitability. So example, reducing raw material waste reduces both production cost and environmental impact. Reducing raw materials waste, yeah, reduces both production cost, yeah, because now you say our productivity will be up. And then of course, instead of taking all these wastage to Dandora, now if you are reducing the wastage, then automatically the impact on the environment will be good. The fourth application of accountants on matters of making decisions on matters of environment is decision support. Accountants provide data for investment appraisal, e.g. green technology, pricing decisions, process improvement. Example, choosing solar energy over diesel generators based on long-term cost savings and environmental benefits. Another function is performance measurement, and of course, our key role, which is reporting. That in matters of environment, we shall develop key performance indicators, such as energy per unit produced, waste per unit produced, support sustainability reporting. Remember, sustainability reporting is where you do reports from 3 fronts. We call it the 3 P's. You report on the profit, report on the planet, and then you report on people. profits, planet, people. Example, a company reports reduction in carbon emissions alongside cost savings. Compliance and risk management, ladies and gentlemen, accountants ensure compliance with environmental laws, avoidance of penalties and reputational damage. Example, tracking emissions to comply with environmental regulations, e.g., NEMA in Kenya. Ladies and gentlemen, if you go to your exam and then you realize the examiner is asking you for 4 roles of accountants in environmental cost management, are you able to remember them, those 4 roles? The 4 roles of accountants in EMA, in environmental management accounting. Let me see. The 4 roles, just 4 roles. The examiner asks for 4 roles. You don't have to cram mine, no. Because I know, like, if I'm an accountant, I'll be able to do risk measurement. So this company comes and tells us that, you know what, I want to build, but I don't want to get city council approval. Then you advise them the risk is like this. I'll be able to go even there, and then I'll be able to measure the fines. So risk assessment. We have the concept of what here reporting, sustainability reporting. We have the concept of what here identifying environmental costs, being able to do cost classifications, being able to do cost control. So you don't have to cram them the way they, and I can see so many charts here, ladies and gentlemen. Allow me to read the charts here. Compliance and risk measurement, compliance and risk assessment. I love that. They support decision making, performance measurement and reporting, cost control, cost allocation. Very good. Very good. Very good. Very good. Very good. Very good. So I hope, ladies and gentlemen, we are okay up to there. At least remember it's about helicopter. You have in this case here general know-how about a topic. We don't want you to start cramming this. If you cram this, that will be very wrong. We don't want you to cram this. If you cram this, that will be very wrong. All right. Management accounting techniques in environmental costing. Management accounting techniques in environmental costing. We have inflow, outflow analysis. So basically, inflow, outflow analysis, you track physical flow of materials and energy. You look at the inputs versus the outputs, what is flowing in and what is flowing out. Yeah. Okay. Yeah. All right. So inputs, raw materials, water, energy. Outputs, we're looking at finished goods. There must be wastage. Waste and what here? Emissions. So the major objective is to identify inefficiencies and waste. Key insight, what goes in must come out, either as a product or waste. Example, a juice company inputs 1,000 kilograms of fruit, output 700 kilograms of juice plus 300 kilograms of waste. So you as a management accountant, your role is to highlight these 300 kilograms of waste. Yeah, Emma highlights that 30% is waste, so it is cost plus environmental impact. You tell us the cost of the waste is this, and taking this to Dandora, what will be the impact on the environment there? So input, output, inflow, outflow. You monitor the materials coming in and the output plus the wastage there. Very, very important. Then we have what we are calling there, the flow what here? The flow cost accounting method. Flow cost accounting method. So concept, assigns costs to material losses, waste streams, non-product outputs. It separates product costs from waste costs. Key components, material costs, system costs, processing, disposal costs. Example, A factory produces 80% of good output, 20% defective stroke waste. Flow cost accounting assigns cost to the 20% waste, reveals hidden inefficiencies. Reveals hidden inefficiencies. So whenever you hear of this flow cost accounting, ladies and gentlemen, we shall be tracking. If you look at this. So in this case here, you track the wastage and assign costs to that. So you look at the entire system flow, how things are flowing there. When you see these costs and ensure that you are able to do what you track them, the wastage. You track the wastage, assign cost to it. Come clear as we continue. Then we have in this case here the environmental life cycle costing. Remember life cycle costing? You're tracking a product right away from conception, research and design. Then we have birth of this product here. After it's born, we expect it to grow. It cannot grow forever lest it becomes a giant. Yeah, so we expect it to mature. After maturity, we have decline, and then lastly, death. So an environmental life cycle costing concept, it considers total environmental costs over the product life cycle from the design. Then, of course, we have a birth, which is production, distribution, usage, dispose. Focus, we are looking at what we call long-term impact. Example, plastic packaging. It is cheap to produce, but expensive to dispose. So see, we're looking at this right from conception to disposal. Life cycle costing shows true cost is higher than initial cost. The true cost, the cost of disposing later on will be much higher. Environmental, activity-based costing. Remember, and activity-based costing, ladies and gentlemen, what are we doing here? We are tracking now our costs into activities, various activities. So allocate environmental costs based on activities causing those costs. It's more accurate than traditional costing. Steps, you identify environmental activities, assign cost to activities, allocate cost product based on usage. So mwanzo, you start with environmental activities. Then number two, you assign costs to the activities. Then after these costs are on the activities, you allocate cost to now the various products, depending on the model, like I taught you how to do, cost apportionment. You apportion to the various products. Examples, activities will be waste treatment, emission control. Products, product A generates more waste than product B. ABC assigns a higher environmental cost to product A. So the most important thing, ladies and gentlemen, under ABC, it's activity-based costing. You will have to know that the very first step is to identify environmental activities. Then you assign this cost to these activities, and then you allocate cost to product based on usage. That particular product that is using a lot of these environmental activities then should be able to take up a higher environmental cost. Why is EMA important? Why is environmental management accounting important? It improves cost accuracy. Remember, most of us, ladies and gentlemen, we do not capture our environmental cost in our product. Once you start talking of environmental management accounting, then you will be accurate. Because now in this case here, you will be considering all costs. Completeness enhances decision-making, promotes sustainability, reduces regulatory risks like fines. Yeah. Traditional accounting versus EMA. Very, very important for you to know this. This has come severally where they want us to compare traditional accounting versus environmental management accounting. Traditionally, we only focus on financial data. EMA, just like the balance scorecard, combines financial and non-financial. They're calling it physical data because of what a number of kilograms, etc. And a traditional method, environmental costs are hidden in overheads. Under EMA, environmental costs are clearly identified. Traditional, short-term focus. For us, we're looking at sustainability of organization. So we're looking at what under EMA, long-term sustainability focus. Examples, manufacturing firms they'll have to look at plastics. If it is cement they are bringing on board, ladies and gentlemen, then automatically we are looking at the environmental concerns of the same. We'll be able to have this cement particles, of course, elevated high, they are straight out into the sky. Lots of issues here. If it is circles, adopting green operations. If they're adopting green operations, it means that they have gone for paperless systems. Energy cost management, compare solar versus diesel. How many of us, ladies and gentlemen, are working for organizations that are using pure solar? Let me see. Pure solar, before I ask about partial solar. Yeah, like my home, I use pure solar, 100%. The initial cost is very, very high. The initial cost will be very, very high. But you see, like I've stayed here for over how many years? Talk of 15 years. All right, using the same. So at the end of the day, you're able to recover. And of course, the biggest cost there will be the cost of what your batteries, storage of energy. But of course, again, you must get somebody who is very, very conversant with solar energy for you to be able to rely on solar like 100%, even to power your refrigeration, to power many things. Yeah, I can see, let me see here. Those companies that are making use of solar 100%, 99 green on my life. 𝐿𝐴𝐿𝐿𝐿𝐿𝐿, great. Workplace, we are 100% solar. Others using biogas, which is also very good. But remember, in terms of carbon emissions, biogas, which topic is this kindly? Advanced management accounting, the last topic, eh? Wow, great. I can see guys here who are, ladies and gentlemen, companies which have gone green, like 100%. Those, number one, will be very good employers. Anybody who is working for a company that has gone 100% solar, those are the companies that are reporting on this 𝗁𝐴 framework. They're reporting on issues of the planet. They're reporting on issues of people. And then, of course, they're reporting on profits. So if they report on planets, they're looking at solar. They're looking at planting trees. Then they come and report on people. They don't want their people to earn very little salaries. So those guys must be working with very, very good company. Because like Kennedy, we're big on ESG. Yeah, environmental, social governance. Very, very good. Very, very good. Those guys must be working with big companies. Lakini zile ambazo zinatumia tu stima throughout, kizima generator diesel, au international diesel, we shall overcome. Note, environmental management accounting transforms the accountant from just a scorekeeper. Our role is not just to process numbers. We're not just scorekeepers, just like, for example, I will get some old mzee. His role in a football match is to count goals. Who has scored, who has not. We are being transformed from just being scorekeepers to a strategic sustainability advisor, trailblazer, enabling organizations to reduce costs, improve efficiency, and protect the environment simultaneously. Very good. Now we go to CASNEB questions. We start with August 2025, question number 1A, where they wanted us to evaluate 4 roles of a management accounting in identifying and allocating environmental costs. Think about that question. For the many years that I've marked this advanced MA, most students, whenever it comes to theory questions, they only put in their own things. Most of them will tend to set their own theoretical questions and then they answer their own questions. Like now here, they're not asking you about the roles of a management accountant regarding EMA. Evaluate 4 roles of management accounting in identifying and allocating environmental costs. So management accounting plays a critical role in ensuring that environmental costs are properly identified, measured, and allocated, thereby supporting effective decision-making and sustainability. The key roles include cost identification, and classification. So management accounting enables organizations to identify and separate environmental costs from general overheads, ensuring great cost transparency. So environmental costs such as energy usage, waste disposal, and emissions are often hidden within what year overheads. Proper classification allows organizations to distinguish between prevention, detection, and failure costs. A manufacturing company may separately track electricity consumption and waste disposal costs instead of including them in general production overheads, revealing what year inefficiencies. Now, ladies and gentlemen, after then we are through with this identification, now we have a role in terms of allocation of environmental costs using appropriate techniques. Those are the kind of things I would want you to be thinking about. So management accounting applies techniques such as ABC and the flow cost accounting to allocate environmental costs to specific products or processes. This ensures that products generate more wastes or emissions bear a higher proportion of environmental costs, leads to more accurate product costing and pricing decisions. Now, ladies and gentlemen, please listen and listen to me very well. You see, they wanted us here to evaluate 4 roles of management accounting in identifying and allocating what year environmental costs. Let me just see the charts here. Very good. Or they want me to check my sound. Sorry for that. How is it now? How is it now? How is my sound now? Sorry for that. Is it back? Am I back? Am I back? Are you able to? Maybe it is network from their side, right? Network from their side. I hope I can get many confirming. Sound is okay. All right. All right. All right. So we can now continue, ladies and gentlemen. So examine or evaluate 4 roles of management accounting in identifying and allocating environmental costs. So in terms of identifying, what are we supposed to be doing? We're supposed, ladies and gentlemen, to identify environmental costs, and then we remove them from the general overhead. And then ensure that we are so specific in how we put them down. So that in this case here, when we are able to identify them very well, we've been able to remove them from the general overheads. Ladies and gentlemen, we are able now straight away to exercise cost control. And then, of course, once we've been able to identify them very well, even for the future, we are able to project and know how much electricity cost we shall be incurring in future. In terms of allocating environmental costs, ladies and gentlemen, remember now we've been able to identify these costs. We've been able to remove them from the general overhead, and now we know which kind of environmental costs we have. We have to apportion them to the various products that we have. That's your role as a management accountant. Apportion them to the various products that you have. That apportionment is what we call allocation. So you allocate environmental cost to the various products using the various techniques like activity-based costing, flow cost accounting. Once you mention those things, the examiner will be able to give you 5 marks out of 4. So where is number 3? Number 4, budgeting and forecasting for environmental activities Management accounting supports the preparation of budgets for environmental management initiatives and forecast future environmental costs. This helps organizations plan for investments in cleaner technologies and sustainability projects and ensures adequate resource allocation for environmental compliance. Example, a farm may budget for installing solar energy systems to reduce long-term electricity costs and environmental impact. This should be number 4. Performance measurement and decision support. Management accounting provides key performance indicators and relevant costs information to support environmental performance, evaluation, and strategic decisions. KPIs such as waste per unit, energy consumption per unit, and carbon emissions are used to monitor efficiency support, cost-benefit analysis of environmentally friendly alternatives. And gentlemen, remember they asked us a question on cost identification, classification, etc. But now remember, once you identify these costs, you are able to know which environmental costs we have and separate them from the general overheads. Then once you bring them down here, you'll be able to now use quite a lot of these costs you've identified now to do further things. For example, I will be able to use the cost identified for cost control. To minimize, I'll be able to make noise as a CEO. Tell these guys how to use 6 million Kenya shillings for Kenya Power. Next month, I want this to be 5 million. So I can easily do cost. As a management accountant, now that I've been able to identify these costs, ladies and gentlemen, I should be able to now even forecast how my future will be. I know what to do because I would want in the future, we continue being more energy efficient. Yeah, clean energy is what I would want to be embracing. All right. In terms of allocations, ladies and gentlemen, in this case, I'm able to allocate now the cost identified to the various products through apportionment. And once we apportion these costs to the various products, I'm able to do proper product pricing. That's a concept which is not even here. Proper product pricing and many other things. So at least that question, I'm so sure, is something you would have done. So overall, management accountant enhances environmental cost visibility, improves allocation accuracy, and supports informed decision making, thereby enabling organizations to achieve both cost efficiency and environmental sustainability. December 2024, question number 2A. Simtel Limited is a small and medium-sized enterprise seeking opportunity in emerging business in mobile telephone innovation and digital marketing platform. However, the company is experiencing challenges in navigating the regulatory requirements such as compliance with electronic waste, e-waste, kama saa simu, Management and Disposal Act. Kuna simu ukitaka kuzidispose kama Samsung, it's very, very expensive, very difficult exercise. The project manager has proposed to the management accountant that they should implement e-waste management and disposal policy when disposing of its electronic waste for sustainable waste management. So required, explain 3 sustainability issues that Simtel Limited would leverage on when implementing e-waste disposal policy. When implementing an e-waste management and disposal policy, Simtel Limited can leverage several key sustainability issues that enhance environmental, economic, and social performance. Number 1, reduced environmental impact. Proper e-waste disposal prevents the release of hazardous substances such as lead, mercury, and cadmium into the environment. Minimizes soil, water, and air pollution. Protects ecosystems and biodiversity. Example, recycling old mobile phones ensures harmful chemicals do not contaminate groundwater. E-waste, I told you e-waste is quite tough because, e-waste, ladies and gentlemen, like I've just given you a very good example, like these mobile phones, when you, for example, go and dump them in Dandora dump site, these are not biodegradable items. These are plastics. It will take like 1,000 years for this thing here to be part of soil, to become soil, all right? So in the process, you'll get like some cows. We see so many cows and goats hovering around those areas. So we can see in this case the kind of harm that can be done. So instead of that, ladies and gentlemen, if you're talking of e-waste management, that's why most of us in this case are buying this recycled phones in Nairobi, right? So long as we get them from a good dealer, all right? Then you're protecting the ecosystem. Because once we have these gadgets even getting into water, I mean, they're clogging the system here. So reduced environmental impact. That's when we have proper waste management system, we will be able to reduce negative impact on the environment. Regulatory compliance and risk reduction. Yeah, adhering to e-waste regulations ensures compliance with environmental laws, such as the Electronic Waste Management and Disposal Act, which then helps us avoid the penalties, fines, and legal sanctions, reduces operational and reputational risks. Example, proper disposal documentation helps the company pass environmental water year audits. Cost reduction and resource efficiency. E-waste policies promote recovery and reuse of valuable materials such as copper, gold, and rare metals, reduces raw material costs, minimizes waste disposal expenses. Example, recycling electronic components reduces the need to purchase new raw materials. Enhanced corporate reputation and brand value. Ladies and gentlemen, any company that goes green, like now we have a stand chart. You must have seen stand charts offices in Westlands. Yeah, these guys have a beautiful office and they have said they've gone 100% green. So they're using solar energy, they have recycling, they're basically using the 3 Rs. Is there anybody in their company who is working for a company that is using the 3 Rs for environmental management? 3 Rs, do you know what, first of all, those 3 Rs are? Do you know what they are? Any company, ladies and gentlemen, that goes that direction and is big in terms of making that aspect visible, its brand value increases, its reputation will be up there. 3 Rs, I'm waiting to hear from you what the 3 Rs stand for. Please talk to me. Today you're not talking to me. Reuse, recycle, recycle, reuse, 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 recycle. Reuse, recycle, reduce. You're very right. So we have a reduce, reuse, recycle, and then of course they're also introducing another R of refuse. Refuse. So you go to a supermarket, these people are putting some, rather your products into some bag, carrier bag. So perhaps you bought a loaf of bread, wanakuwekea kwa karatasi. Unamwambia hapana, wacha nibebe kwa mkono namna hiyo. Yeah. So they're introducing another R of refusing. Refuse. Refuse. Refuse, yes. Reduce, reuse, recycle in that order. Yeah, unakataa. I don't know whether there are some ladies in the house, most ladies in the house, refusing, wengi hamwezi kataa. I'm sure tukiwatembelea nyumbani lazima uko na carrier bags aina mingi, kala zote. Kala zote. The best, unabeba ile moja ambao umezoea, unaambia elekea kwa hii. Sio kuchukua mpya mpya kila siku. Sio kuchukua mpya mpya kila siku. Kama sasa unakataa unasema hiyo kusuma yangu, just give it to me like that I carry. A carrier bag with carrier bag. We must be fair to the environment, yeah. Ya mzinga, Walioke. We shall overcome. We shall overcome. Okay. We shall overcome. So enhanced corporate reputation and a brand value. Sustainable practices improve the company's image among stakeholders, builds customer trust and loyalty, attracts environmentally conscious investors. Example, marketing eco-friendly disposal practices and differentiate Simtel Limited in the competitive digital market, innovation, and a competitive advantage. Implementing sustainable e-waste systems can drive innovation in product design and business processes. It encourages development of recyclable or modular devices, positions the company as a forward-thinking technology firm. Example, designing phones with easily replaceable parts, reducing long-term waste. Social responsibility and stakeholder engagement. Proper e-waste handling protects public health and supports community well-being. Well-being reduces exposure to toxic metals, promotes ethical and responsible business practices. Example, partnering with certified recyclers ensures safe disposal and job creation in recycling industries. Long-term sustainability and business continuity. Sustainable waste management ensures responsible use of finite resources and supports long-term business viability, aligns with the global sustainability goals, and ensures future resource availability. Example, efficient recycling system helps maintain supply of critical materials used in mobile technology. By implementing an effective e-waste disposal policy, Simtel Limited can achieve a balance between environmental protection, cost efficiency, and strategic positioning, thereby enhancing both sustainability, performance, and long-term profitability. Ladies and gentlemen, anytime they ask you about this concept of advantages of managing your waste as an organization, it could be electronic waste or just a normal waste, always remember the 3 Ps. 3 Ps. When you are reducing your waste, you are recycling your waste, you are refusing, in this case here, from entering into this wasteful moment, automatically you shall be able to increase your profits because basically you're doing cost control. Profits will go up. Profits will go up. All right. You shall be very good to the planet. The planet. Planet is the environment. So all those things you saw there, them mentioning about environment. Yeah. So in this case, you will be reducing carbon emissions. You'll be so nice to the ozone layer. All right. And then, of course, you are giving back to this environment because now you're not throwing, you're not wasteful. Yeah. So it means what here? Sustainability in the long term. Because anybody who thinks about waste reduction, that must be an environmental enthusiast. That must be somebody who goes out even to plant trees. All right. So automatically, those are people who are thinking about what here? Sustainability of a business. Then, ladies and gentlemen, we have the last one, which is what here? People. What people now is corporate social responsibility. You don't want to harm people, right? Yeah. So when you're looking at the reduction of the e-waste, yeah, then automatically, ladies and gentlemen, you are people-centered, people-sensitive, right? And if you do that, now the other advantages like brand value going up. Look at, for example, Equity Bank. The day they were telling us that they have been able to grow over 1 million trees. All right. All right. So with that kind of knowledge, then you'll be good. You'll be good. So we are supposed to break for our evening prayers, which are really important after our Muslim fast. Yeah, the fasting period was quite nice, I believe so. Yeah, but I have a proposal. The handout that I've given you has a few more questions, which I would want you to go and read on your own. You know, when a Mwalimu is at home, this should be family time, isn't it? So today I would want to steal your 1 hour. Yeah, so that I can also take care of a few things here and there. Yeah, but all the other days now from tomorrow, I'll be at the studio or at school. You know, initially, I used to be a crazy one. I had whiteboards even at home. Then I discovered I was doing so much. I mean, even from whether we dismantled all the boards from home. We said when you're at home, now you are a father. Yeah. Otherwise, thank you so much. We shall overcome. Bye-bye. Thank you so much. Be blessed. Bye-bye. Please make sure you finish all the questions which are there. Thank you. Bye.